Considering the volatility of the stock market, it's not expected that a company's stock will be continuously on an upward trend. However, if a company's future potential indicates that it will record enormous growth in the future, then loading up more of their share could be the best idea. Managing partner at the Future Fund, Gary Black, is a huge Tesla bull, and the stock investor has recently disclosed why he will keep buying Tesla shares for as long as he can. Hey guys, welcome back to Tesla Tomorrow. In a recent interview, Gary Black revealed why and what would make him buy more Tesla shares. He also explained how he values Tesla stock, what a fair price-earnings ratio is, and the kind of growth he can expect from Tesla stock. Gary Black believes that by 2030, Tesla will earn $30 per share at a growth rate of about 15% with a PE ratio of 30, giving it a share price of $900. Black also considers discounting since his predictions are still for the future. According to Gary Black, his Tesla model has grown about 30% per year, although lower than the 50% which Tesla bulls expect. Black is not a big fan of Tesla's FSD and only considers it as a driver assistance feature. Therefore, by combining the expected earnings from other businesses owned by Tesla, it could be said that the Tesla investor is quite conservative with his numbers. Where does Gary Black see Tesla's stock in the future? Let's find out, but before we do, if you like this type of content, don't forget to like and subscribe, and ring that notification bell to keep up to date on everything going on with Tesla. Black believes that Tesla can record a 30% growth rate for the year, as opposed to the 50% growth rate that Tesla anticipates. According to him, he expects that Tesla will produce about 10 million vehicles in 2030. The Tesla bull had also previously stated that he expects EV adoption in the US to rise to 60% by 2030, from 6% as car prices come down. In a recent tweet, Gary Black referenced a revenue prediction by popular Tesla bull Ron Barron, who predicted Tesla to hit a $4.5 trillion valuation in the next decade. Ron Barron had recently told CNBC that he expects Tesla to deliver outsized gains that will ultimately propel the company to a valuation of about $4.5 trillion. Barron expects that Tesla will sell 20 million cars at a $50,000 average selling price, a 30% operating margin, which will give $300 billion in operating income. And with the PE ratio 15 times, this equates to a $4.5 trillion valuation, excluding the robotaxi, bots, batteries, and everything else except EVs. Gary Black considers Barron's estimates of a $4.5 trillion valuation for Tesla over the next decade as being realistic, adding that this prediction is in line with his, even though they are both analyzing it in different ways. Black predicts that 10 million Tesla EVs will be produced in 2030, with an EPS of about $42. He also assumes that a 30 times PE in 2030, which equates to a $1,260 per share valuation, approximately $4.5 trillion. According to the Tesla bull, using PE is the best way to come up with valuations. And he added that the higher the growth rate of a company, the higher the price-to-earnings ratio will be, since the company is paying for future earnings. Following the recent price cuts of Tesla cars, Gary Black stated that he is confident that the massive price cuts of up to 20% for some Tesla models will not impact the status and long-term valuation of the car company. Black cited that the cuts Tesla made seem to be positively impacting sales, as the automaker tries to boost its growth after sales fell during the period. He also added that Tesla is still the most desired car to EV buyers, and clearly the number one car, with 60% market share of EVs in the US and under 20% globally. The former Goldman Sachs asset manager recently cited that usually when the market leader cuts prices, they have more room to discount than competitors because their gross profit is higher. He also added that in this situation, Tesla is going to be the winner in this price war, as are most market leaders when they cut prices. According to Gary Black, while there has been news of rising competition over the years, there hasn't really been anything that's impacted Tesla that much. Despite a year of setbacks for Tesla shareholders, which saw the stock price plummet roughly 70%, Black stated that Tesla is still a very cheap stock, particularly with Apple, Microsoft, Amazon, Google all growing their volumes at 30 to 40% per year to trade at 30 to 40 times earnings. He also stated that Tesla should be trading at a much higher multiple than GM, Ford, Volkswagen, because it's growing at 35% to 40% per year. The Tesla investor and future fund managing partner expects to see big volume increases for Tesla in the first quarter of this year, as the EV maker recaptures volume lost through price cuts. He believes that while Tesla's rankings came down in the past month due to the Twitter noise and fear of a drop in demand, this is only temporary, and it will eventually pass with time. Before the upgrade on Tesla's grade rating, Gary Black predicted that Tesla was likely going to have an upgrade on its credit rating by the S&P in October last year. Tesla had previously been upgraded to a BB Plus rating, one step below investment grade by the S&P in 2021. But this didn't sit right with several Tesla bulls who believed that the automaker deserved a higher rating, given that it's been delivering profits for more than 2 years straight and has built a cash position of over $18 billion while sitting on very little debt. Luckily, Tesla was actually officially upgraded to investment grade long-term credit rating by S&P Global Ratings in October. The rating company announced that it had raised its credit rating on Tesla from BB Plus to BBB, which is the automaker's first investment grade rating. The firm wrote that it now views Tesla's credit profile more favorably because the automaker continues to demonstrate market leadership in EVs with solid manufacturing efficiency that supports strong margins and has also sustained positive free operating cash flow. S&P Global Ratings admitted that Tesla has surpassed its expectations on many metrics. The company believes that Tesla will continue to maintain low debt while delivering strong profits. It disclosed that the stable outlook reflects its expectations that Tesla will maintain low debt levels as it sustains its solid market share, profitability, and strong liquidity amid a weakening economy and an increasingly competitive environment for EVs. Gary Black is also a big fan of the Cybertruck, which could launch mid-2023. With more updates on the way for Tesla's FSD software, its Cybertruck may be getting closer to its release date. In July 2022, Musk confirmed that Tesla's plans to launch its Cybertruck in mid-2023 were going into motion. The Tesla CEO stated that the company is still expecting to be in production with the Cybertruck in the middle of this year, adding that he is very excited that the production might turn out to be Tesla's best product yet. Gary Black also believes that Tesla's Cybertruck will be a huge project for the car company, and according to the Tesla Bull, the Cybertruck will be Tesla's most widely anticipated and important vehicle, while the second highest priority for Tesla after the Cybertruck should be a sub-$35,000 car. Gary Black added that a Tesla vehicle that is targeting the under $35,000 segment is a different initiative from Robotaxi, and this segment comprises about 50% of the market. It's important to note that Gary's prediction does not include several other aspects of Tesla's business, such as energy, Dojo, batteries, TeslaBot, and so much more. Gary Black predicts that there could be a possible launch of Tesla's $30,000 electric vehicle in 2024. Just like several other analysts, Gary Black is also a strong advocate of a share buyback, and following Tesla's struggle with market challenges and economic headwinds, some analysts believe that a typical stock buyback may be a solution for Tesla. Gary Black suggested a share buyback sometime last year, claiming that since Tesla's stock was undervalued at the time, the dip may be an opportunity for the car company to buy back some of its shares, and he added that this will give Tesla enormous growth potential and will boost dipping stock price. Tesla's stock price has been in a series of upward and downward trends, and only started to maintain an upward trend after the recent price cuts. While the past months have been tough for the car company, better sales and profit margin could see the stock performing better in the future. What do you think about Gary Black's comments on Tesla? Let us know down below, and don't forget to tell us what your valuation of Tesla is. And if you want to know more about what Tesla's been up to in the last few days, go ahead and click on this next video on your screen. See you there.